Episode of MC Fireside Chats, back from my deathly illness that I was suffering from last week. Appreciate Joji Meg filling in for me as the guest host there. Haven't had a chance to watch the whole thing, but did catch a little bit of it on LinkedIn Live. Sounded like a much greater discussion than would have happened if I was present, as always. But excited to be back with you guys. A couple of recurring guests here. Sandy stuck in during the intro. Welcome, Sandy. Mike Harrison, Robert Preston. We're missing a couple people this week who didn't cancel on us, so we're just going to kind of maybe stare into the camera and give them a sad face for not letting us know. And then we have Saurav. Am I pronouncing that right?
Yeah, my name's Saurav.
Saurav. Okay. All right. I won't forget it again. Saurav from Sojourn Lodging is here as one of our special guests. So welcome, sir. We're also supposed to have two other special guests who did not show up either. So today's just the Wednesday for nobody keeping their commitment to the show, but we're going to have a good discussion anyway. So excited to have all of you guys here. Do you want to briefly go around the room and just introduce ourselves? Mike, do you want to start?
Sure. Mike Harrison with CRR Hospitality. We own and operate and consult on luxury RV resorts, parks, glamping, manufactured home, storage, and hotels.
Awesome. Thanks for being here, Mike, as always. Robert?
Hey, good afternoon, everyone. Robert Preston with Unhitched RV. We own, operate RV parks and campgrounds.
I think you're underselling yourself a little bit, Robert, but that's okay. All right, Sandy, you want to go?
I'm Sandy Ellingson. I named myself an RV industry and campground advocate because I sold a technology company and then started working with campgrounds just on the side because I loved it and kind of fell into this job. And so I just get to do what I love to do, you know, every day, just working between the two, the industry and the RV campgrounds.
And you evolve a lot, right, Sandy? So you're preparing for the AI future and all that stuff. Do you imagine that there'll be a time where you teach robots how to walk through campgrounds? Like you're like, mimic me, watch me?
Oh, I think I'm already doing that.
All right.
I learned from the best, Brian. I'm right there with you.
I almost pronounced it wrong. Saurav, please introduce yourself.
Yeah, so as I mentioned, my name is Saurav. I'm with Sojourn Lodging. So I'm the owner and property manager. It's like a family kind of owned and operated business. We have 40 tiny home units in Sevierville, kind of Gatlinburg area. And we have some nice on-site amenities as well as like pickleball court, welcome center and whatnot. But we're kind of new to the glamping space. And so we're kind of building this business out.
Awesome. Excited to learn more about Sojourn and what you guys have going on there. As we typically do for our recurring guests here, is there anything that you guys have seen come across your desk in the month or so since we've all been together that you guys think we should be talking about? Robert or Mike or Sandy?
I think, kind of some interesting big news for the industry. The portfolio closed that John Shee put together. That was kind of some cool stuff. 1,500.
The Blue Metric?
Yeah, Blue Metric. Yep. Yeah, 1,500 sites. What was it, 97 million? Pretty interesting.
Yeah, I think it was 97 million. I don't know the site number, but it was 97 million. It's interesting. Go ahead, please.
No, it's just something we can discuss and chat about. That's certainly a data point for us all to think about.
Yeah, I'm interested to see how much I think acquisitions pick up more, acquisition opportunities pick up more in the back half of 2026 leading into 2027. What do you think, Robert?
Yeah, I think, well, and then also interesting fact, right? Just got an email this morning from a lender that's in the space that does a lot of lending. And, basically the email says, we're getting ready to take back an asset. Who's interested in buying it?
Yes.
So I think we're going to see a lot of that. And I think we're going to see, well, I think deal flow will pick up, but I think it's going to be probably more creative distress stuff than the typical on market. That's my hunch.
Yeah, I think that's why it's going to pick up back half of 2026. Like, I hope that what I'm seeing in the economy flips around and changes. But like you've seen, and I don't know if you've seen this, but ELS reported in their reports that they're expecting, based on advanced reservations, down 13% year over year at their properties. Now, ELS is a different type of animal than most small mom and pops. Mm-hmm. That's obviously macro. It's not micro. It's going to be different everywhere, and it's still really, really early with a really shortened booking window. So, like, nobody should panic. But
right.
There are going to be certainly cases like that. I think that a lot of people overbuilt and overpaid during 2021, 2022. And I think those opportunities are going to come to fruition for people like you, Robert, or other, like to manage properties that are just not doing as well as they once did.
Right.
Or lived up to their potential. So yeah, it'll be interesting to watch that too. Mike, anything on your?
Yeah, we're seeing similar. I think Q4 was quieter just in terms of volume and inquiries and transactions. And, I had 3 separate consultants reach out to me and say, hey, do you have a business? We refer a lot of business out to consultants that we don't want to, handle from our side. And then I would say the last 3 or 4 weeks, the volume has picked up considerably. And some portfolio, perspectives, as well as, some of these other types that Robert's, mentioning. We've been predicting this for a while, that, the properties that were built or acquired in 21, 22, and then over pro forma'd, that either open 23, 24, 25, for sure are missing their numbers, for sure are missing Disker, and, either going to have to go back to the bank or, need to have a new management company on loan term, whatever it might be. And so we certainly saw that back half of last year, but that's also continuing into this year. So, I mean, good and bad. Bad for the the current owner / seller, but it does spur growth. Hotel industry has been through this is probably one of the first ones for the RV industry, but hotel has been through this cycle numerous times. It's always a good thing. It just spurs continued growth afterwards, because usually capital reinvestment, it's usually more sophisticated buyers. It's always a lift when you get through some of these transition periods.
You have to imagine there'll be some properties though that should just never have been built, right?
Oh, of course.
Yeah.
If you look based on your demand, I mean, look at Texas, right? I mean, that is such an overbuilt market, and there's such low barrier to entries, and everybody was building a property in hill country, and I think they're seeing a glut of supply, and so there's not as much transient demand as there was 4 years ago, and either pivoting hard to long term or just not filling. So yes. And obviously a lot of buyers got into the space that had no idea about an RV park. Hey, I got 10 acres. Let's put 200 spots, and building 15, 20, 25 sites an acre, 30 years ago, 40 years ago was normal. Now it's not.
Okay, yeah.
Expect a little bit more space, etc.
We see a lot of that in our market in the Smoky Mountains. A lot of overbuilding, a lot of saturation. And so, there's definitely some small business owners, single owners that are definitely struggling. So
How is your business doing through the ups and downs of 2021, 22? Obviously, I assume that was up, but.
Well, we're very new. So we just opened last year.
Okay.
Last year, like in the May, June, we kind of had like a rolling window where we slowly started opening up new units as they came online. We did really well in the summer and in the fall, like October timeframe. Those are kind of like the peak seasons anyway, and it kind of matches really well with our customer demographic. But right now it's a slow season here. I mean, a lot of the attractions, a lot of the activities, Dollywood's closed. It just kind of starts slowing down around this time. So we are definitely experiencing a little bit of the struggle as far as filling our calendar for January and February, aside from like little spurts here and there for like Martin Luther King, Valentine's Day, and whatnot. But we're hoping to recoup that in the peak seasons, like the summer. March is also really busy as far as spring break and whatnot. But I mean, it is just a fact that there's overbuilding in the area, and it's an oversaturated market. So we're trying to figure out strategies to kind of differentiate us from some of the competitors, focus more on groups, things like that.
Yeah, it's a good. How do we reset this? Like if you're a property owner, and I know a couple, right, who I've worked with for years, long before 2021, 2020, when this boom came around and people started building. If you're one of those legacy property owners and you've done a good job keeping your property up to date, and you're thinking about activities and amenities and what the guest wants, and you have a good location, whether it's along the river there in Hill Country or, in Gatlinburg or Pigeon Forge near the National Park and Dollywood and all those attractions there, you're going to get the people there. But even if you have then a distressed asset because it was overbuilt and it ends up getting, foreclosed on by a bank, and then somebody takes it over, purchases it, whatever else, you still have too much inventory in a market. In some cases, not all cases, right? How does this end up resetting itself? you guys have any thoughts on that? Like, because their long term has to be or maybe there doesn't have to be.
There's no such thing as too much inventory. There's just too much inventory for the basis, for the cost. So the reset is just reducing the basis, which means someone will lose money. And so the reset, like Mike was talking about in the hotel industry, bank takes it back, gets resold, lowers the basis, someone puts more money into it, better asset, etc. The occupancy, I guess my short answer is that demand is demand and supply is supply, right? But you can't control basis, you can't control the cost. And so that's where everyone's in trouble, or a lot of people are in trouble, is that it's overbuilt for the occupancy that you can achieve, for the demand that you can achieve. But if you take any property and for the right cost, it can still be a great investment.
Because there's a different type of demand that you can go after than the.
No, it's the same demand. Like you certainly can achieve a better occupancy or whatever, but and find margins here. But from a global perspective, it's just that too much money was spent on these properties. There's no solution to that except for someone taking a hit and resetting those bases. And then from that point forward, then the occupancy, ADRs, et cetera, would support the correct basis that should have been entered at the start. That's my thoughts on it.
Well, so recognizing go ahead, please.
I think Robert's exactly right. There's a reset of the basis, which is part one, and call that the bottom line, right? And then there's a reset of the top line, which is certainly demand. And again, not that this follows the hotel industry completely, but if you look at let's call it 3 different cycles in the last 30 years in the hotel industry, and 2008 obviously being the most prevalent, and then COVID. Every time the industry would bottom out, and then it climbs, and then it climbs, and then it climbs, and then it hits record numbers by a point or two of occupancy and ADR, and then after 10, 15 years, whatever the cycle is, it resets itself. And so I think this industry, if you look at the RVIA, which is always kind of the impetus, the front end of it, and Sandy's certainly the expert in that world. When their numbers, start to steadily decline year after year, then we're in trouble. But their numbers are not, and they continue to rebound and grow. And so, I think what will happen is, there's no data on this because there's no star. But what I suspect is, people say demand is down. I don't know that demand is down. I just think there's more supply, right? And so it's spread out over to more, sites. And so what will happen over the next year, I believe, is the demand, will continue to grow. Maybe it's by a half point or by a point, and then next year will be by a half point, by a point. And, in a year or 2 or 3, some of those properties that certainly were overperforming, will reset their basis, as Bob said, but then also the demand will fill in and fit into, and that'll be the new norm, right? And then the industry will grow, will be super healthy. 5 years again, we'll all be going, and then there'll be another cycle. And so it repeats itself if it follows, a lot of the hotel industry world, which it likely will.
In multifamily, right? The super sophisticated asset classes of multifamily, exact same cycle, right? Overbuilt, oversupply, all building stops, and it takes, the supply catches up, demand catches up, and there is no supply because it takes 3 or 4 years to get a development through. And then the reality is, there's occupancies, vacancies are way down, rates are going way up. We need to start building again. It takes 3 or 4 years to get that through. So it's a constant. I think the big takeaway point here is this is probably the first realistic cycle for RV parks and campgrounds that because of the new capital that's
ever, right?
Ever. Right.
When was the last time 30 or 40 years that an overabundance of campgrounds have been built?
Correct.
It probably never has been. COVID basically exploded. And the same thing happened to, let's call it, the Home Depots and the Lowe's of the world, right? 25 years ago. When those started to expand, when the home market started to, so it's a newer industry with fresher trends and fresher cycles, but it will follow, and the glamping that continues to be infused into it will help, build it up and buffer it. While there's some headwinds, it's still an encouraging and exciting industry to be a part of.
Yeah, I would use the illustration like we're finally teenagers, right? You're getting some pimples and zits and some things that are popping up, but it's a sign that you're growing up as an industry, this pure cycle, that we finally stepped into the development supply oversupply cycle that exists for all other assets.
What if I still have zits, Bob? What if we never?
You still look great, Mike. Don't worry about it.
If I'm an owner, though, listening to this, and you bring up a good point, Mike, like we don't know, like I tend to think like ELS is a bellwether, like we know at a macro level, like that 13% is not micro. But I agree with you. And again, for all the reasons that like it's still too early to call that or anything else, right? Just that's their quarterly report. I agree with you that there's a difference between oversupply in hill country causing a perception of lack of demand, which is not real lack of demand. There are certainly areas of the country that that's happening in, but there are also probably areas of the country where, because otherwise the macro of 13% across the board that ELS reported, some were probably down 20, some were probably up 5, some were right. But that median or average that they reported is down 13%. Like it's not oversupply everywhere, is it?
No. Go ahead, Sandy.
I was just going to say, that's something we've already talked about in the past too, was about how even during COVID, everybody was like, oh, there's no supply. And that wasn't true. It was, there wasn't supply in certain areas, but in other areas, there was huge supply. And, back then we did this we did this research and we came up with 2 terms. We said there wasn't enough known or desired sites. Known meaning we still had so many parks that had no online presence. People couldn't find them, especially young people, right? They weren't using the right technology. And then desired meaning we had so many long-term stay neighborhoods. And people, a person who's just getting into camping would go into this neighborhood and they're like, if this is camping, I'm not interested. And I think 2 things are happening right now. I think we've got a lot of people who are going back to Egypt and they're seeing occupancy down and they're going back to this long-term stay model instead of trusting where we need to be and where we've got. And so I'm real concerned about that with so many of my parks trying to do this, literally not just saying I'm going to do seasonal or portion, but everything. Sun is selling off a lot of their properties to do nothing but long-term stay in all of their parks. And some they need to do that, and some that's, I don't agree with it. The other thing too, I think is
hold on, because I want to touch on that one point there, because you're not wrong. There are a whole ton of people that are converting to long term.
Right.
And some of these are doing it for the wrong reasons. But there are a whole lot of really smart people, Sun leadership, insert name of other big company that are like have really smart people that are looking at this and saying we should be long term. So there must be some data behind what they're doing, right?
I think it's not data. I think it's financials. They're saying we can guarantee income in a season and we can make our bottom lines. I don't think they are truly looking at it through the vision of what could be and will be. If you've got to prepare for it if you want it to come. And so like what Saurav is doing, I've stopped saying campers. Everything I do, everything I communicate with now says traveler, because we've got to engage that younger generation. And I don't think we'll ever have in the future a large percentage of people that say I'm a camper. They're going to say I'm a traveler because they want to be able to travel in all different types of ways. They want to Airbnb, they want a hotel, they want to, glamp, they want to camp. They want variety. And what's interesting is we're already seeing this begin to happen in a lot of the research that's being done in early 2026. You're seeing, rental RVs nudge up more and more where everybody thought they were not, and now they are. We're seeing like other numbers in other areas where we're fishing in the same pond. So like the demand may not be increasing, but the demand is shifting to different locations. And so I just feel like there's so much opportunity. And instead of, and I steal this from Toby O'Rourke all the time. She did one of her sessions one time was called Reimagining Your Space. And I feel so strongly that we need to reimagine our space right now as an industry. It's super exciting. What happened at the Tampa show, I've never seen or felt the energy that was there between the industry side and campgrounds and literally wanting to build bridges. And we're in the early stages of doing some of that. And it's rocky and it's not easy. And there's some bumps in the road, but it's happening and everybody is committed to it. And I've never seen that before in 10 years. So, so I do, I think that it is not all gloom and doom. I do think that, yes, there are people that were upside down during COVID. They paid way too much for parks, and there has to be a reset on that. But in general, with a lot of my mom and pops, they just need to be able to have someone help them reimagine their space, get out of what they've always done, right? And start looking at a new way of doing some things.
Which is what? What's your, like, not 20,000 foot view of reimagining a campground for what is to come?
So I think reimagining your space doesn't look like renting a space. I think it looks like filling a need. So find out, what is that potential traveler looking for, right? And a lot of that is going to come out this year, I believe, in educational type things, or, whether it's, doing an event where you bring in everybody and they learn how to choose the right rental module, because I'm scared and I want to rent it. What we know about Gen Z is they want to participate, but they're afraid of a barrier of lack of education, looking stupid, all these things. If we provide those resources for them and create new onboarding methods, then we'll meet their need and they'll come. So we're not just selling a site, we're selling experiences, we're selling education, we're selling community. And that's the mindset change I really think we need.
I mean, I agree with that. I just think you can't get trapped into I want to deliver an experience without defining that experience very clearly.
Oh, I think that experiences are as unique as campgrounds. And that's funny because I still have people calling me all the time saying, hey, will you help me with my park? Do you have a template? And I'm like, no, there is no template. I mean, because every park is so unique and every park has an opportunity to do something unique and special. And, like I said, I can go back to lots of examples where we've worked with parks and they're doing amazing now. And sometimes they're working less than they were working before, like my park up in upstate New York. I mean, he only is open from Thursday to Sunday and he makes more money than he was making before, only open part-time during the summer and when they could for weather. And he's doing ice fishing. That's all he does, is he teaches young people how to ice fish at his park. And they are booked year round, Thursday to Sunday.
So I think there's two different conversations, that we're having encapsulated into this one, right? What is state of the industry and kind of, what does the business mix look like? And the other is the service deliverable, right? And so to your point, Brian, and look, Sandy's, her market is very different than Bob's market or my market or Sun's market. She says mom and pop campgrounds, right? That's not necessarily what we're looking at or what we're measuring, which is more larger campgrounds or corporate campgrounds or multi-property campgrounds, and they're different perspectives. But at the same time, I mean, I agree with you, Sandy, from an experiential hospitality standpoint. That's what we focused on for 6 years, right? Before it was ever a thing here, because obviously coming from the hotel world, that's been in that space forever. But I reference that intentionally because no matter how hard the hotel industry has tried to differentiate itself, and they've been doing it for years with lifestyle hotels, at the end of the day, they're still called hotels and they're still called guests. And so I think what you're saying is all true. But categorically, they're still RV parks, RV resorts. They're still campgrounds, and they'll still be, guests, customers. And so while they may, I agree with everything you said. And Brian and Scott released an incredible report about, Gen Z and millennials. And if you haven't read it, you should. We used it at our leadership conference for some training on generational evolution. And, I agree with everything you said. But I think, the industry almost needs to aggregate more in order to grow, sort of like we've been talking about, to standardize, some of the terms so we can get more data and we can get more collaboration and we can get more funding, while still delivering those personalized experiences and the experiential hospitality standpoint. And to your point earlier, Brian, and I always hate to refer to the hotel industry. I know people get tired of me doing that sometimes, but, you decide, do I want to buy a corporate hotel? Do I want to buy a leisure hotel, in a beach destination? Do I want to buy a government hotel, a group hotel, et cetera? And RV parks are no different, right? Is my RV, resort transient based? Is it long-term based? Is it a mix? Does it have glamping? And so, depending on your market and depending on your model, that can absolutely work, right? But most hotels are not one thing, right? If you are one thing and then there's a downturn, you always say don't put your eggs in one basket. And the term in the hotel industry is diversification. Making sure that you have multi-segment backbone to make sure that if one segment's down, you can build it up with government or corporate or SMERF. And I think the RV park industry, the most successful parks can, flex. They can pivot, right? And so maybe you were 70-30 transient, 4 years ago, and maybe last year was 60-40, and maybe this year it's got to be 50-50. You got to bolster some of those other shortfalls, because the long term is more reliable. It is predictable cash flow that goes into the bank. And so I do think those that are doing that, they're smart to make sure that they're offsetting some of these misses. And as an owner perspective, we would be irresponsible to not look at making sure that we're not offsetting. And Bob, I don't know if you have a different perspective, but at least that's how we approach it.
I wanted to ask about because that's something that we've tried to do is some of that experiential kind of based marketing. We tried bringing in performers for events and whatnot. We tied in with some of the local events like Broad Run and some of those types of things. How do you sell and market that? It seems like we're running into an issue with commoditization of our product, where they just consider, okay, how many guests does it sleep? How many beds does it have? And they're just at that point, it's just a race to the bottom, because there's no differentiating factor between us and competitors. It's just that we've really struggled to actually communicate that as a value add to customers. It seems like they're not really, maybe it doesn't resonate with them. They don't care. How do you sell and market that, the experiential based piece?
I think I would tie that question in as well as what Mike just mentioned. I think there's the part of it that matters is you can sell it, and you can sell it during the holidays, and you can sell it during the summer, and you can sell it when there's competition for it and entertainment. And a lot of people get tired of me saying, well, what about Tuesday in February, right? What about Tuesday when it's cold and it's 35 degrees outside and it's raining and it's nasty? Doesn't matter. Doesn't matter what experience you provide that day. You're not going to get the demand. So I think that's where the sort of the dilemma here is, that Sandy's talking about, how do we still build a lifestyle, because that's what camping is. That's what RV and camping is. It's a lifestyle. And then your product there is a beautiful property, by the way. I was looking up on the website, and Sphereville is an amazing market. Very well done there. But you are competing for hotel. It's a lodging place, right? And so you can provide a unique or different experience for sure. But then the day you're competing for that, and then an RV park is a lifestyle, and a camping is a lifestyle. So we're competing for that experience. So there's a big differentiator between hotels and RV campgrounds, because one is
Sorry.
me. I'm not calling you. Don't worry. You can hang up. And one is is an experience, but not a lifestyle, right? Lodging is an experience that you're looking for, but it's not a lifestyle. People don't say, I'm a hoteler. I'm not I'm a traveler, to your point, right? That's really smart. Whereas an RV or camping customer, they are RVers and they are campers, because it's a lifestyle component. So I don't know if that provides any clarity, but the long-term discussion will be something we discuss forever. We've got properties now in Iowa that we are up over 100% in revenue in the winter months, because in the past, no one ever camped or stayed there. And now we're open. Now it's all long-term, and there's, some type of construction thing going on. And so a property last year that made $6,000 in January is now on track to make $45,000 for the month of January, right? So you have to, for any one person to say at any specific point, this is the ratio you should do, is just, it's missing the point, I think, of the conversation. have to be able to look at everything. But I don't, my opinion, probably very similar to Mike's, the experience component of it is really important, but it is not going to solve the problem.
Saurav, I'm up in your area all the time, and I can tell you, I'm coming to Sevierville twice a year, regardless of what the weather is like, regardless of what the dates are. I'm coming. That's one's for the car show, and two is for the change of colors. We go up there religiously twice a year at least. That finding the right people that are already coming, because you've got such a small number of units to fill. Right. And in a lot of ways, you're not just looking for RVers or somebody who's got an RV, right? You're looking for those travelers. And a lot of times for me, because I'm 3.5 hours from Sevierville, I do choose to go and stay in an Airbnb instead of my RV, especially if I'm only going for a couple of days, right? Because, you know, gas and all those small roads with that big RV.
Yeah.
But being somebody who goes there all the time and I know it a lot, we could have an off channel call and I'll give you some tips that I'd follow as a person who actually comes there and stays.
Why don't you just book his place, Sandy? And
I am going to. Believe me, I've already.
There you go.
I was checking it out.
Yeah, I would love to take the conversation offline.
But I do have to book incognito because, you know, if my RV parks find out I'm staying at a glamping site.
Jeff, welcome.
Hey, Jeff.
Were you busy? You look like you're in a hotel, maybe. Are you in a hotel?
Actually, I am at home recuperating. I just had to, I got online to show that I did make it, and I'm in rehab, so.
What are you, you don't want to share? You can say, I don't want to share.
Oh, I had open heart surgery about 3 weeks ago.
Oh, I thought you said they gave you a heart.
No, they just.
I can't tell
They
if that's
did
an
find
insult
one.
or
It's
I don't know.
small.
So you're doing well.
Yes, I am getting ready to get back to work.
Good to hear, sir. Do you have, I know you jumped in a little bit through this conversation. We were talking just a little bit about forecasting for the year, and then we were talking a little bit about experiences at different RV parks, how we draw people there, some of the supply and demand. Maybe there are issues, maybe there aren't issues, depending on the macro versus the micro. Anything you'd like to add to that conversation as you were listening to us? Or?
Just demand this year is so far tough to peg. Looking at the normal indicators, it looks like a good year, but what bothers me is what's going to happen in the next 2 to 3 months. I think although the numbers are good on the economy, it just seems there's a lot of pressure on the economy to slip back. But right now, if everybody looks at the numbers, everything looks rosy. So
You're talking about the economic numbers, or you're talking about campground numbers?
economic numbers.
Okay.
Campgrounds, our reservations are, from what I can see, just about even. A couple of the areas that are somewhat new are going up a bit. But established campgrounds are pretty much hitting their marks. They did have some increases in pricing. So we do expect some revenue growth. Mainly it depends if we can keep the camper nights up.
All right. Anything else you guys want to add on that discussion before we talk about Sojourn for a second?
Let's give him the floor.
All right. Tell us about Sojourn. What do you have happening in Sevierville?
Yeah. So as I mentioned, we're new. So we just opened in like May, June. Again, it was like rolling window. We have right now we have 36 units, but we're permitted for 40. So we're going to be adding a couple more. They range in size. We have a couple of different styles. They range in size from 20 to 28 foot, all on trailers. They can accommodate anywhere between 2 to 4 guests. We've seen, as I mentioned, as far as bookings go, it's been slower during the slow season has been the biggest kind of struggle for us. And also kind of determining, like, trying to figure out like our brand, that's kind of one of the things that we're going through is like a brand rework, like a brand audit. The vision behind Sojourn was, it was all about connection, all about like, bringing people together. We have like community fire pits, there's pickleball courts, there's a welcome center. But from what we have seen, a lot of the people that stay on site, as I mentioned, they don't utilize all of those amenities, and it's very much like they, book it and they stay there, and then they go ahead and go out and do whatever they need to do in the city, and then they come back. And so that's been our biggest struggle, is we're trying to, make sure that, number one, our brand aligns with our product. It's also, aligns with our customer and the customer demographic. And then we're trying to kind of brand all of our marketing material around that customer profile. But the kind of our ideal target is, it's more that like kind of Gen Z, between like 20 to 30, kind of younger, looking for something kind of different, and kind of a unique stay, more in that glamping kind of side. Where, it's not dealing with like an RV or anything, or actual traditional camping. So that's kind of where we're at right now. We're still, as I mentioned, we're figuring ourselves out. But we did see great success in the summer and fall of last year. And so we're hoping that we'll see that, moving forward, and kind of recoup some of our revenue, like, that we haven't hit in the January and February during those months. So it's still definitely a kind of work in progress. We're building it out, but we're really happy that it really happy to go live with it and whatnot. So we're pretty proud of how it's all come together. So. And
you said you were new this year, right? So you haven't been through a January or February yet in Gatlinburg?
No.
Okay.
No, we haven't. So, and that's the thing. It's like coming up with the targets on revenue. We had to model it based off of something. We had to have something. And so we're going to have to readjust our models. And we're seeing a lot of consolidation of our revenue just overall, because we have cabins as well. The tiny home concept is kind of an additional thing. It's a separate business from our cabins. But we're seeing, even with our cabins, consolidation of our revenue in those peak seasons. So like October, summer season, things like that. So we're probably gonna have to revise our revenue targets and have that for future years.
If you can get your hands on any of the research that Scott Barr has been doing in the last year or so, that will really help you, because a lot of what he's been doing focuses on your target. And what's interesting, like even when you talked about your pickleball courts and your fire pits, statistically you can have those, but unless you have somebody who is leading those activities, whether it's somebody that's an activity person on site, or you just found somebody in the group that's coming in that wants to be the ringleader, they will not come out unless there is something scheduled and they're invited, and it makes it easy for them to connect. And so, like a lot of my parks, we've started doing that with them and saying, look, you need, just bring in a weekend activities person that's young, that will bring them in, and so that's helped. The other thing I forgot the other thing I wanted to tell you now. The thing that was super interesting about Sevierville and that area, we did just do a study for another location. And some of the stuff that was coming out was that, like in December, January, and February, December, they focused on all the decorations for Christmas coming up, right? Mm-hmm. January, they shifted and started focusing on health and digital detox. They use a lot of the keywords. Nobody says health anymore. They say a digital detox, right? Mental health is not. You got to get the right words. But focusing on the sessions where they bring people in, and even doing it with businesses where they come in and do their retreats during the week, and then you have individuals on the weekend, but you're mirroring the exact same sessions. You can bring the same person in to lead those sessions. So that's a really good area that they responded well to. And then February, people spread out October for all of their fall events, while we tried spreading out February in a couple of parks, and it worked really well. I mean, we did get the biggest demand on the 4th of July weekend, but there were a lot of people that went, oh, we're probably not going to be able to go, and we're getting a discount if we go the weekend before or the weekend after, which spread that out over 3 weekends instead of just one.
You know, Saurav, I'd actually agree with you. I'm looking at your website, and you know your website's beautiful. Your pictures are beautiful. But to your point, you know, what's your identity? Are you a hotel or are you outdoor hospitality? Because your website says outdoor hotel, right? And so, what is the customer looking for, or what customer are you trying to attract? You know, who are you trying to be? You know, because your marketing will dictate, you know, which one you are. Right now, there's nothing there that says outdoor hospitality. There's nothing there that says escape. There's nothing that, you know, it says outdoor hotel, and even things are titled as rooms, you know, not, you know, cabins or, you know, et cetera. So you may want to look at that. Also, you know, like you said, you haven't experienced your first season. This is a highly transient market. Do you know what a star report is?
A star? No.
So if you're a hotel, which it looks like you're a hotel, you know, you can get a market report. It's basically a hotel occupancy report, but that'll tell you what the lodging occupancy is. I almost promise you in January, it's probably somewhere around 25%. So your expectations of what's going to happen December, January, February, when your top demand generators are closed, you know, why are people coming, you know, otherwise? So you'll have to pivot. So the discussion we had earlier, you know, if you're only relying on transient, good luck. You know, you got to kind of say, what else can I fill my cabins with? Is there any construction? Is there any long-term? Are there any rentals, et cetera? So my suggestion would be you connect with, you know, a consultant, somebody like a Jeff or a Sandy, or even a hotel consultant. You know, you know, you got to figure out who you are first. You know, are you a hotel or are you an outdoor hospitality property? And then all the things that Sandy described, which are true, you know, those come after, you know, but you got to start bigger picture first about who your identity is, and then determine what you want to do. And understand, if that's the market, you know, what's your peak occupancy in January? It only might ever be 35%. If there's just, you know, Coachella, we have a property there, for example, and there ain't no way we're ever running 40 or 50% in the summer. You know, it's 115 degrees. You know, there are many properties that close. You know, so we buffer the rest of the year and build around knowing that the summer is going to be slow, and make sure that we offset with long term. So just a quick glance at your website, which is beautiful, and your pictures are beautiful, and your units look beautiful. It looks like you've built a very nice property. You just got to figure out who you are and then pivot your strategy.
And I would add on to that, as you think about it, right? You guys have a brand new construction place. You have all this stuff in here. At some point, you're going to have to take a harsh reality look at it too, of how much money do you have into it. And as you go, well, what is your identity? What is this going to be on and off season? Is it a hotel? Is it a campground, et cetera? And compare that to what's in the market. And, you know, hopefully you find a path through there. But if not, then you're going to have to say, well, actually, financially, none of these paths work. So should we sell these homes? Should we condo them? Should we set them up? Should we replat this property? You know, maybe that is the exit path, right? So at some point, it's built now. So you got to find a path forward. But the data is the data. What the STAR report says, what the occupancy is going to be for hotel and lodging is what it's going to be. Same thing for the RV park, right? Which there's some data out there to see what occupancy rates and stuff are for Sevierville. And then the ADRs are the ADRs. Yes, can you be 10% better than everyone else? Sure. But you're not going to be 100% better than everyone else. And so if the math doesn't work, then you've got to figure out the pivot from an investment standpoint of what does this need to happen. I assume you guys own all the homes?
Yeah, we own everything.
Yeah. So there's a lot of ways to be very creative on the investment ownership structure, capital structure there too, to think about it. But that's a critical point for you guys to think through. Hopefully you've thought through before you built it. But if not, now's a good time to really dig into that and start doing a long-term exit strategy.
Right. I do believe that because I was going to ask Mike to speak to this, because he is actually a hoteler also. And when we have people in hotels, they don't talk to each other. They don't do things together unless they came in as a group. But if you notice, the new trend is having bars and meeting spaces and bigger breakfast areas in hotels. And those are the clients I believe that you're going to try to reach. So what I would do is dig into the dynamics of that market. And then with your marketing, either your marketing or a marketing firm, I would pander to that crowd. The name of the brands escapes me right now, but like the Embassy Suites and some of those have bars and restaurants now. And that might be where you want to look at where they do want to socialize at a hotel atmosphere. It's
the lifestyle hotels. I mean, that's certainly
that's.
I mean,
And
I'd
I
ask
think that is the market he was looking at. You just have to figure out how to reach it, and
That's a good suggestion.
Yeah, what marketing is available for you to get there.
Yeah,
Because,
and I'd ask you a question, Saurav. When you think of your customer, what are they typing in Google or AI? Hotels near Pigeon Forge, or RV resort near Pigeon Forge, or glamping near Pigeon Forge? What do you think they're typing?
We would like for them to be type. I don't know if this is what it is right now. Given, again, we're going to do the brand audit. We're going to make sure that we're consistent with our messaging. But the glamping is really what we're going for.
Okay,
so glamping in Smokies.
And that's okay. Then you have to pivot your entire strategy because your website doesn't say that, and your content doesn't say that, and your marketing doesn't say that. So for a glamping person, they're not going to find you, and they're not going to be looking for you, and you won't resonate with them. So that's kind of how I'd start. Is if that's the customer you're going after, then yes, you've got to reposition, your beautiful property to hit. And I think it is a glamping only property. Looking at it online, but you're marketing to a different customer and your messaging. So look, this isn't a Coach Saurav, section. So my apologies. I was just curious when I was looking at it, and as you were talking, I'm like, I can't help myself.
Well, I mean, it's a good session because what you're saying is also applicable to probably lots of people who are watching the show too, who may not be in Sevierville and who may not be Sojourn Lodging, but may have similar identity issues or trying to figure out the market or switching from short-term to long-term or whatever else, right? Adding glamping or not. So I think it's good advice. I think the first thing I would do, and again, this is me. I obviously I'm an AI guy. I would take it to AI and say, listen, I want to reach people who want to come to Sevierville and want to go glamping. This is what I want my identity to be. I think here's my existing website. Go look at it and tell me what are some basic fundamental options that I have to switch, to pivot, to reach these people. Is that the finish point? No, but it's a starting point to spark some ideas in your head about the basics that Mike's talking about, because outdoor hotel is not glamping. It's kind of a mix, right? Is it outdoor hospitality? Is it glamping? Then is it cabin rentals versus rooms? What do I call people? How do I do the messaging? How do I write it to Gen Z that are 20 to 30, if that's what I want to be my target audience to be? And then after that, you decide, okay, can I implement this myself, or do I need a marketing company? Or can I implement this myself, and do I need a Sandy or a Jeff or a consultant, right, to help me take that step further? And I think that's going to give you a really good idea of a starting point and a path to take, and then go from there, right?
Yeah, I did want to also mention, so majority of our customers do come from like the OTA platforms like Airbnb, VRBO. And so, our website messaging and whatnot, a lot of them don't end up seeing it. They actually see it through Airbnb, VRBO first, and then they search us up online. But that's one of our things too, is that we want to build our brand identity outside of just Airbnb and VRBO, because over reliance on those OTA platforms can be a little dangerous.
And direct channel is far cheaper and higher convert. There's a million statistics and research on direct booking versus OTA channel. So there's a lot of reasons to do that. Are you American Glamping Association?
I don't think so. Mm-mm.
So the first thing you do is go sign up for the AGA and talk to Ruben. Get into the glamping world. Everything you're going through is not new, right? This is exactly what they do. They'll consult with you. They're the association for the country that are the experts in glamping.
Do they actually host the glamp? Because so it's a family thing. I actually didn't end up going to the glamping show last year, but the rest of my family did. Are they host of the glamping show?
Yeah, in Colorado.
Yes.
They don't own the
deal.
show, but they're a big part of it. Yes.
Okay. Yeah. So yeah, we did attend that, but I don't know if we're actually part of the association. That's something to look into for sure. Yeah, that would be helpful.
Hate to be like the harsh, crucial CEO corporate person, but those things are all true. But first, you got to figure out what the revenue and expense objectives you have, and you might find out that glamping ain't the right way to go. Maybe it is.
True.
Yeah.
You've got to kind of start first with like, what do I need to achieve here financially, and then who is the best target to go after? Glamping, hotel. Are you going to be the best glamping? Are you going to be the best hotel? Are you going to be whatever it is? Then work backwards from there, but kind of arbitrarily deciding what you want the property to be and to whom you want it to be. Unless you just have the financial ability to just build a passion project, great. But if not, then you got to look to see what the area needs.
Yeah, we've actually already done that analysis prior to even building. We set like certain targets as far as like ADR and whatnot and occupancy. Our issue right now is with it being slow, we're not hitting a lot of those occupancy percentages. But
that's
it also hasn't been a full year.
That's not what Bob's saying, though, Saurav. He's saying, what can the market bear? Meaning, is it more profitable to be a outdoor hotel, or is it more profitable to be glamping? Like, was there a feasibility study done? Like, did you just build a glamping property because you think it's cool, or because you have numbers and data and research that support that the glamping ADR and occupancy would be higher than a hotel? Or to Bob's point, is a hotel a better fix, right? And so if you didn't do any of that research, or you didn't have a feasibility, you don't have that, you should probably start there. And there are companies that can help you with that too, like Sage Outdoor Advisory. They do both hotels and glamping, and can do the research and pull the star reports for you and those kinds of things. But I think that's kind of what Bob meant is not just the targets for what you want to do, but are those numbers realistic for the project that you're performing?
Well, especially now that he has some actual data of running the park, knowing actual expenses, payrolls, other things, you can now come up with a more realistic budget and cross-reference that to, yes, we do hope to grow, but budget to what you did so that you don't overspend. And the biggest thing on a startup is, if you want to be successful, if the market and the demand is there, you're probably not marketing to the right people. So part of your budget has to be, in the first few years, increased on marketing, and then it can be switched as you start building a basis. But I don't know what your percentage of spend on marketing is, but for any new business, it's got to be higher than an established park.
I mean, I would qualify his spend on Airbnb as marketing, honestly.
Yeah, absolutely.
Yeah, so you would be tracking, like for us when we're launching a brand new construction property, that marketing component is, I would say, sometimes the magnitude of 5 times what we'd want to normally be spending. And we think about that really like a CapEx part of it when you're launching a property. And then on the flip side, one of the metrics that you would certainly want to be tracking is the delta or difference between OTA reservations per month and per year versus your direct, right? And so, like everyone's saying, that needs to be inverted relatively quickly, and is it really key? What would be one of your KPIs from your effectiveness of marketing in general is that you start to see that ratio of direct versus OTA change significantly. Faster the better, of course.
Now, I would caveat, I'm sure the horse is dead somewhere on the floor. I would not allocate any market spend until you determine that it's the right customer. Like if you're going to blow through $100,000 for glamping, but you really should have done hotel, you just wasted the money. So to me, the very first thing you got to do is decide: am I outdoor hotel or am I glamping? Do the research, get analysis, make sure you understand who you are. Then I would go through your rebranding, and then you can do your marketing budget, and everything they just said is true. But if you do that in a vacuum without figuring out first who you want to be, then your spend isn't going to be effective.
Yeah.
I did want to ask a quick clarifying question. What is an outdoor hotel? I mean, I actually am not familiar with the term. And how does it differ from glamping?
I don't know. You put it on your website.
Well, or a marketing person did.
Yeah. The other thing,
So
are you doing exit surveys on your guest? Are they one-time
Where is it on our website?
one-time renters, or are you getting repeat business? Because a lot of glamping I've found is a one and done. But if you can build that customer base and run specials during the winter and some of that, you may increase your occupancy in those off seasons. But what you're doing right now, and what Robert and Mike, part of what you have to do is build your customer base of your own customers that you can build off of. That's going to take a while. You can live day to day off of OTAs, but eventually you have to have your own people that are in love with your property.
Yeah, absolutely. We do exit surveys. Yeah. And so we're working on consolidating that data to get like suggestions on improvements and whatnot. Yeah.
In answer to your question, an outdoor hotel is really, maybe a broad term for like hospitality accommodations that are connected to nature, right? And if you think of like, maybe Ben Wolf's property, the Oneras, the one he's building in Miami, Auto Camp, those are more like, outdoor hotels. Someone who has the experience, and they're either very clear or they're very confusing, right? Glamping, people have a certain expectation of an escape, and we've had so many discussions on this show of what glamping is, right? Is it 2 yurts on the side of the Grand Canyon? Is it park models in an RV resort? Is it 30 glamping units only? But outdoor hotel can be confusing. It's the fact that like you just asked, what is it, right? And so to your customer, you also got to define that as well. But an outdoor hotel is a newer term for sure, and it's a really, really specialized market. And I'd be careful with that term. I think you're either marketing yourself like an outdoor hotel or glamping. But again, I think if you're outdoor hotel, then you got to follow the star reports and market like hotel. If you're glamping, then you got to pivot to outdoor hospitality and leverage that.
And think about what's coming to your customer's mind when you say that word too, because the first time you said it, Mike, I thought about motel by the side of the road where the door opens.
Yeah.
You have to think about the expense side of it too. If you sell someone your hotel, does that mean you're providing daily room service? Does that mean you're providing daily, cleaning? Where that's not part of the glamping industry or RV industry for sure, right? There's no expectation that housekeeping comes in daily and restocks and stuff. But maybe if you're an outdoor hotel, that's possible that expectation exists, and which would drastically change your, expense modeling and staffing and stuff. So it's a tricky situation. Sandy's been on. This is one of her tasks, is to give definition to these terms.
Exactly. To give definitions to the terms and have classifications for parks so that we know, because to me, a long-term stay park is not a outdoor hospitality camping park. It's not transient. Camping is a vacation rental kind of thing. But I have loved this conversation. To me, it has felt more strategic than any of the other conversations we've been a part of. I love how we've kind of collaborated to come up with ideas for our guests. I want to propose a topic for us. As you guys were all talking in my head, I'm constantly thinking reimagining space. But today I was thinking about reimagining the pro forma. Like, what would it look like if we were building a pro forma for a park that said in January and February, 60% occupancy is what we're planning for, so that anything else is gravy. And when you build that out, you know that you're not going to reach 100%, right? You need to reach more in the other months, which you know you'll do, right? But at least I think setting expectations is so important. And I think especially during COVID, we created this expectation that every park ought to be 100% occupied all the time. And I kind of believe the old adage from the church, when your pews are 80% occupied, you need to build. You need to always have 20% occupancy for people to come in at the last minute. But I would love to dive deeper into how do we create a pro forma? And are we just always doing it the same way we've always done it? Or are there things we need to take into consideration now with the advent of all the different varying types of stays? Does that need to change? That's to you, Brian.
Well, that's to my other guests here. You guys want to have a discussion on that next month?
No problem. My opinion would be pretty short on that one, but we'll dive into the details of it.
Yeah, I listen.
It gives us a month to rebuild the whole accounting system for the nation. It's doable.
Well, we don't have to rebuild the whole thing, just sections of it. And now that we've got AI, we don't even need to do that. We just tell it to do it.
Okay.
Right? So.
All right. We got to wrap up the show. We're a couple minutes late. We have no Outward today. Scott Barr's traveling. So we'll be back next week. But other than that, we'll see you on another episode of MC Fireside Chats. Thanks to Sandy, Robert, Mike, Saurav, and Jeff for joining us. Appreciate you guys and hope you have a great day. See ya.
Thank you.
Bye, everybody.
Thank you.